Yeah, good morning, good afternoon, or good evening. I've got no idea what time you're watching it. It is 7:16 p.m. on the East Coast, Sunday, October 20th, meaning it is 7:16 a.m. over here on Monday morning where I am. And that was a clip of Thanksgiving 2025, 2026, 2027. Actually, I don't think we'd be able to stretch it out any further than that, but you get the idea. Those are my brand new turkeys that are having a little roam around, scrap in the morning. You're likely to hear some farm animals. You're likely to hear some dogs because this video is getting done later than typical. I didn't wake up at 3 in the morning. I woke up at 5:30 in the morning because I got to hook up with a buddy of mine, an Egyptian buddy, who cooked me the most ridiculous Middle Eastern cuisine yesterday, and I went into a complete food coma last night. So, onward and upward because I have very little from a wide point of view to share, as nothing much has changed. But I am adding in a few minutes, a clip from one of my buddies over on the West Coast of United States who is one of those eternal optimists who only looks to the upside, and you can get a clean point of view as to the minimal upside you have and a few other key notes that he always misses, even though I argue with him about it. But I'll show them to you, and it's up to you to make your decision because we are 2 weeks away from the presidential election, which will be happening on Tuesday, November 5th. And there is already the Trump has won trade, which we have seen get initiated over the last couple of weeks with the Dow Jones, with the Russell 2000, with the weakening of the Nasdaq. And there's a lot of conspiracy theory going around about that. And Alex Jones he's got one, which you call it whatever you want to call it. But what Alex Jones is actually talking about has not only some validity to it, but it actually fits. And when the shoe fits, and Alex Jones has been right a lot of times before, and I'm not an advocate of Alex Jones, I hardly can make it through 45 seconds of his dialogue. But he's actually got something. He's got some documentation to back it up. And I'll share that with you in the email here. So here's a look at the futures, which opened up a little bit more than an hour ago. The Dow Jones up a massive 47 points. The Nasdaq up 35 points. The ES up 8.5 points. And the Russell 2000 up 7.25 points. Now we can move that back over to the other screen since we don't need it, and we will go through a very quick summary here. As the SPX, the S&P, has ended its sixth consecutive green week in a row. Remember this, okay? Sixth consecutive green week in a row. We are at plus 23.59% year to date. We are at plus 38.84% year to date. And when people refer back to this has never happened, this has never ever ever happened, this has never ever happened, when they're referring to bear markets beginning, I ask that you refer back to 2007, but that is a different story. Anyway, last week, gap ups every single day of the week, gap up. And volume, or not necessarily volume, but yes, volume and range are tied in together. Range went to complete and absolute shit as the end of the week went, 38, and Friday's 26-point range. But we are still seeing here a little bit of an anomaly here when we come on to the October. We're getting red close, green close, red close, green close, red close, green, green, red, green, green, red, red, green, red, green. Where it's pretty inconsistent as far as it's just going army trade. Red, green, red, green, red, green. But we did stay in the 5800s the entire week last week, so that is of note, with 5804 5808 being down there as far as the lows, and we still have that gap to be filled from 5804.48, the low on Tuesday, down to that 57.80 close. 57 57.95. I remember having that for a specific reason. However, 58.04, 57.80 is the gap to be filled. 57.95 having been the high back on October 10th, which is why it was there. But the gap fills at 57.80. No, it doesn't. There's a gap filled over here. My bad. Anyway, no fucking gap there. You see, this is the reason why you look over and look over your stuff. So there is no gap to be filled there. That was the pressure test. 57.95, 58.05, 5800. So there. I've found that I was wrong. I got that out of the way early in the video, and we can move forward. Over on the SPX, over on the credit spreads, all green last week, other than trying to catch that fucking, we're going back down to 5800 over there on the Monday. And as I have these rolls in green, the rolls with the looking for a red week, prior week, not working out, looking for a red week last week, not working out, I've continued to point out where I believe those should be pointed to, which you can see highlighted up here on the top left, and you all already know about that. But I will bring you back over here onto the other spreadsheet to show you that we have a 204-point range for the month of October. 3 weeks into the month of October, we have a range of 204 points, most of which all occurred, the majority of this additional 100, all happening over that move from last week, Friday PPI, into where we went and traded to last week, so the prior week, not last week. 364 was for September, 532 in August, 278 over here in July, 289 back in June, 331, 310, back in April, and I don't see any need to go back any further than that, just other than giving you a pretty well good visualization that we are far from having completed the range for the month of October. And with the lows being 56.74, it doesn't take a rocket scientist to be able to do the math and figure out what would be minus 100 from 56.74. At the same time, it wouldn't take a rocket scientist to add 100 points to 58.78. It would just have to take a eternal optimist to do something like that. QQQ. Again, not much over here other than a red week. Red week over on QQQ. Take note of that. Red week down a whole 1 point on the week. Again, nothing. We're still at nothing with 487 being when you can wake up out of your coma and start paying attention to the QQQ. 488, 487 on the downside. Above 495, you're just fucking around and you're messing with fireworks. IWM, again, same thing. Not much to cover over here. 2 green weeks in a row, all up in the 220s last week. Oddly, getting a little bit of a red day there on Friday, like I tried covering how you get green days on the IWM on Fridays. You crush the VIX on Fridays. We crushed the VIX, but we didn't get that red day over there on the IWM. So I apologize for those of you that were looking at calls above 227 to see 227.21. That 21 cents higher than where you were, because, I mean, how many clowns can you shove into a fucking Volkswagen? You know, how many asylum seekers can fit into a 1988 Toyota Corolla? You know, you got to put it together. So I will, well, I really don't have much to go over on here because, futures are open. We're at 58.72.40. We're up 7 points, and the week has begun as far as trading goes. We're 2 weeks away from the election. So I will bring you on to the charts, since I don't need to go over that anymore, and I will share with you very quick before I go and segue into Arnie's video. Looking here at the Wave 3 top over on July 2024, coming off of October of 2023, when Israel invaded Gaza, the big bottom there, which is looking at its 1-year anniversary, as we just had the 2-year anniversary of the October 2022 lows last week, and over the weekend was the anniversary of the Black Monday 1987 Wall Street crash.
We are ready!
So looking at the Wave 3 being up here in July 12th, and then going into OPEX week, and having this ABC minus, 600 points? 500 something points. Minus 9.2, 9.7% correction during that drop over there in July. There's the dogs that I warned you about. Coming off of the July bottom, looking at it as what it is. A 1, 2, for it to be a 3, the minimum is 59.34 because wave 3 cannot be shorter than wave 1. Doesn't work. And where we're trotting at here, looking at this low here over in September, where we had that small little almost 5% correction, AB, 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 trotting over there where we traded that 57.40, 57.35 for a better part of 3 weeks. And then the being an AB with the AC equals A way up here at 6,039. And that's how we're able to have our upside targets over here. So again, you want to be the eternal optimist and understand that we have a plethora of upside that can be advanced into. By all means, feel free to. I'm not going to, put you out there on a pedestal for, seeing what you see. We all like different sized booties. And I'll bring you on, I'll go to that later, I'll bring you on to the weekly. And again, having recorded your 6th consecutive green week over on the SPX, I will only remind you, is all that I'll do, I will only remind you that you had 6 consecutive green weeks coming off of that April sell-off down into the May lows, which then proceeded into that July OPEX week, 3 red weeks in a row, minus 9.7% correction. That's all that I'll point out. I'm not pointing out anything else.
I'm going to come.
Having already pointed out that the election's in 2 weeks. Nothing else. And that we've never, ever, in my 52 years of existence, gone into an election without volatility and just been on a cruising upward movement. Never, ever in history. But got nothing to say about that. Zoom out, sticking with this. Zooming out a little bit wider. I'll go with a 20-week. And showing you here the wave counts coming back, green weekly wave counts coming back off of the minus 52.5% drop from 2007 into 2009, which once again, you can go back and see that was a new all-time high being placed there before the quote-unquote bear market began. But again, bringing you in here and just going into the first little wave of Trump. You had 6, 6, 7, 6, 7, 8, 7, 6 off of the Lucy Passport 2015 correction. 9 coming off of the Trump win head up into March, right after Trump won. Trump winning right down here. You had another 6 heading into the later part of 2017 before topping out in January and then going into your big ABC correction. Boom, boom, boom. 9 coming off of the 2018 Christmas Day bottom. Steve Mnuchin and the PPT crew. And we had 6 prior to 5 going into the COVID top. So as you can visually see for yourself, there is a very small number of green consecutive weeks that continue to produce above 4, above 5, and now since we have 6, above 6. So that's all I'll leave you with. I'll come back to this in a minute. Come over on to your SPX 5-day. We are just doing nothing but trade inside this new box. 58.70 being our top, 58.45 being our new bottom. We've broken down earlier in the week, but as we went into the latter part of the week on Thursday and Friday, that 58.45 continues to hold. 58.45, as you see here, where we started out the week just below it, supporting for the majority of the week being this is where your bulls are in charge from 58.45 to 58.70, and this is where your bears are in charge from below 58.45 to all the way down there to 58.40 or 58.05, 58.10. An incredible little box that you are in, going absolutely nowhere, and the credit spreads are working fantastically. So I bring you here onto the weekly view of the full moons. And as you see on my chart where I have plotted these little white circles correspond with where the full moon plus or minus 3 trading session, once in a while, a fourth, little bit of a squeeze, squeeze it out just one extra day, a fourth day, because you see it on your chart. And these are your full moons. And as you can, you have it on your chart. You've drawn it. You've already gone out and done it because you were interested in what the hell is this full moon thing. You'll see that these full moons tend to correlate with very strong tops and very strong bottoms. And having had 6 green weeks in a row and where we went to, I have a very hard time putting a full moon bottom into a dipless move to the upside. So I have my full moon placed there on the top, and very similar to as we went into the middle portion of July, as we head into the elections, very interested to see how it all works. Because as you see here, we have a trend line coming off of the April lows into the August lows, and that ties out right around 5,400. Now you have a wider trend line coming off of the 2022 lows into the 2023 lows. And that ties out here right around 48.18, which ties out right around the 2022 top. And then you have your bigger, broader, wider support trend line down here, which is only one, which ties out down here at 2,600. Now, who is this guy talking about 2,600? Well, I will bring you in and I'll go here on a, monthly, yearly? We'll go with a monthly, because the monthly, you can see it on monthly. Coming off of the Great Depression bottom, Supercycle 1 topping out in the dot-coms, Supercycle 2 bottoming out when we bottomed there in 2009. The 300 extension ties out here to 54.14. Now, coming off of the Black Monday sell-off of, 1987, that 300 extension ties out here to 477.86. 477.86 tying out, essentially, you couldn't have made it work out any better as we topped there in 2022. Couldn't. Now, over here, as we have moved and progressed into 2023, that is no longer the case with this Fibonacci extension. However, you had the warning levels here coming off your 2016, 2018 extensions, and again, same thing here coming off your 2009, 2015, 16 extensions, all of it pointing out to being a warning that you are in the top in the 56, 57, 40 area. Looking at your projection as to how high and how escalated you are, completely up to you. If you would like to continue to keep all of your positions long, buy and hold, never get rid of as you go into what everybody has already discussed about Supercycle 4. So I will leave off this, come back onto this chart, because where I want to go with is the earnings. Earnings this week are IBM, Boeing, and Tesla. Those are your 3 big earnings. Here is your IBM channel coming off of the, call it October of 2023 lows. The channel has continued to produce quite significantly, where you've got a 1, 2, 3, here's your 4, nice little dip in April. And from April, call it May, it has just been on a euphoric all-time high extension, way up here, well above 233, which pretty much looks pretty perfect. However, being at the top of your channel, as you are right here, the only downside that I would see on IBM would be down around 200, and I wouldn't hold my breath for that, as the couple of these gaps I haven't cleaned up, so there are other gaps that are on this chart that need to be filled out. Bring you out to a maximum wide year view so that you can see where you are with IBM, and here you go. So if you would like to suggest that this was your bottom, this was your wave 2, or your wave 1, this is your wave 2 bottom, and you are in wave 3 and you're going to 350, 400, I hope it works out for you. Tesla reporting earnings on Wednesday as well, and Tesla, unfortunately for me, for my position, for me, you don't have a trade here on Tesla. You are on the 50-yard line. This 207.50 is miraculous. It is absolutely amazing. And it's also minus 50% from your all-time highs. We're barely holding above it. And as you can see here, it is support resistance consistently for the better part of 2.5 years. Having come up here to the resistance area, 258, 260, earlier last month, the drop down was pretty simple to play. However, going into an earnings report where Elon is putting all of his chips on the table.
Go fuck yourself. Is that clear?
Betting on Trump to win. Because if Trump doesn't win, he's fucked. He's completely fucked. I wouldn't play the earnings report. And after the earnings report, regardless of what the earnings report is, I would still have a significant amount of caution until the election is complete. And if the election is complete and Trump does win, which we're all suspecting he is going to win, Tesla would be one of those secret stocks that I would be looking at, similar to how it was with U.S. Steel back in 2016, 2017. That's what I would be looking at with Tesla, and Tesla I would looking at it reaching back up to around 300 level. So that, again, it's unfortunately all that I can really ramble on about, because we're talking about the same thing over and over, having gone nowhere. You have the elections coming up in 2 weeks, and I now lead you into, up to you how much of it you want to watch, but I would strongly suggest that you see what the eternal optimism is and the lack of consideration of caution for what amount of upside is left. Here's Arnie's rendition of where we are. Have a great day. Have a great Sunday night. And I will see you in the chat room tomorrow morning. There's a couple of trading spreads for the SPX already in the spread room.